All right.
Leave, leave if you
20
want to.
2025, new year, new microphone
Yeah. I feel like Geraldo.
with the
Or,
mustache.
yeah.
It is thicker looking.
I need a comb over and I need to lie about my military service or something, and I'll just be just like him.
Well,
Or,
he's
or
got
is that
the big glasses.
yeah. Oh, well, actually, it doesn't come with the nose, but there we go.
Holy man. All right. So 2025, uh, part of the country is on fire and the other part of the country is iced over. So what
Correct.
is going
It's
on?
no matter which way you look at it, it's the government's fault or it's the insurance company's fault that a natural disaster occurred. So I've been
Well,
engaging in some interesting conversations on Instagram in the last 24 hours.
some of the conversations are pretty interesting. We won't get into it, but it's not our position to do that, especially. But it is crazy just watching it on TV all unfold out west. The fires are intense. I mean, all the journalists are standing outside of these things, and you're like, "Holy cow! How can you even stand that close?" I'm sure it's super hot on them just standing that close to the fires.
Yeah, I mean it's definitely not a good thing.
No, I mean it's just wild. We were watching coverage quite a bit, probably Wednesday night, because we were anticipating the snow and everything was already delayed into Thursday. And so we're sitting there just watching the coverage, and my goodness, it's crazy. So from an insurance perspective, though, with a natural disaster, in this case fires, you know, how might that affect? Could it potentially affect us here in Texas?
Yes and no. I mean, a company itself is going to have to change their rating factors, and it'll trickle down. But for the most part, not a direct correlation. It just depends. I mean, the big report is that like State Farm canceled 75,000 policies or whatever ahead of this fire. That's that's true, but it's not like they did it the day before the fire started. People make it
Yeah.
seem like State Farm like saw the flames and called everybody and was like, "Hey, you're screwed. We're not covering you." These things are letters. There's regulation on it. They have to be informed. There is a choice. They can go with the state funded plan, but if they don't want to pay the amount, you don't get the coverage. This is a pay to play type situation. You get coverage because you pay for it, not because you think you should have it.
Well, and a lot of these homes are right on the coast that are getting burned down too, like steps away from the water. And so they were
Hmm.
probably already really hard to insure as it is.
Yeah, well, and then you look at the rising cost as well. You're looking at a 1,600 square foot house in the heart of LA is going to cost you $2 to $3 million. That insurance is going to be relatively high anyway. So it's a slippery slope that's been going on for however long real estate has been skyrocketing in
Hmm.
California. They don't have a natural water source other than the ocean. Wildfires have always been an issue. This isn't new. It just now it's affecting the millionaires closer to the heart of the city.
So, before I moved into just totally being a broker here locally, I was doing national stuff and I could do California, for example, for a while. And I just haven't ever gotten back into licensing there. It's really hard. They have a much more stringent, like long red tape kind of process to get licensed. But I was doing loans out there, and a friend of ours was looking at doing a house for them. I ended up doing their loan, but they ended up getting a different house because the house that they were interested in originally, the insurance, because they backed up to like some nature areas and preserves, the fire insurance, I think you helped me work on this one.
Hmm.
The fire insurance was like wild and crazy high, to where they can no longer afford the payment. So it's like, well, that's not worth it. So can you speak to that a little bit, maybe? Not so political in nature of like how it all works and why and stuff, but the fact that there are different types of coverages in certain homes, like in Texas, maybe flood insurance is a good example. Like some homes get tagged with flood insurance, and you just have to be aware of all of the other additional requirements that may be there and what that does to affordability?
Yeah, I mean, speaking to fire specifically, like here in Texas, we have that issue as well. If you back up to a green belt or an undeveloped wooded area, a lot of carriers may say, "Hey, your fire score is too high, it's too risky, and you're too far from a water source or a fire station. We don't want to cover you." It's not, "Hey, we're going to cover you. We're going to take your money, and then we're not going to actually replace anything." That doesn't happen. They tell you pretty upfront, and it's if the risk is too high, they don't have to participate in that agreement with you. They just tell you, no, we don't want it. It's no different than anything else. You know, some people are scared of flying because they think it's too risky. They're scared of heights. Like it's not worth their risk or their fears or whatever. The same as with insurance. And that goes with flood as well. Flood's a completely separate policy. It's less likely to happen. It's very much more unpredictable. So flood is a completely separate insurance policy. And if you're in
Well,
an area where the risk is high, you have to
yeah.
account for that.
How about the city of Houston a couple of years ago? The
Yeah,
whole the
that's
whole thing was underwater.
when Harvey hit Houston. I don't know the actual figures, but it's jaw-dropping how big of a percentage of the Houston area did not have flood insurance and were not covered
Were
for
they
those
in flood
floods.
zones?
Um, some of them were, some of them weren't, but flood insurance is only required if you have a note on the home, if the lender's involved. So if you've got a high population of paid off homes, you know, that's the risk you take. I mean, we've all seen those movies of like a risk assessor evaluating a billionaire who likes to skydive and rock climb and hike on
Mhm. Yeah.
volcanoes. They have to evaluate how likely it is he's going to die before they bring in enough money to afford that. It's the same with insurance. If your house is next to a fireworks stand, there's a higher chance it's going to blow up than a house that's not next to a fireworks stand.
Yeah, and there's a lot of homes that are don't carry insurance, just regular insurance, let alone all these special riders and everything else. So, um, can you talk about like flood insurance or hazard of any kind, like fires and stuff? FEMA, isn't it a FEMA map that makes those things and tells you whether or not your home is in a specific zone? Can you
Yeah.
tell us how like how do you determine whether this house, yes, is in this certain plane and this house is not?
So from my standpoint, we just quote it. So FEMA has a NFIP, National
Right,
Flood
right. But
Insurance
you
Program.
quote it, but something kicks back and says yes or no. Who is
Yeah, they'll give us a
determining that?
determination and they'll give us a clip of what their map is. So it'll be like shaded in on what flood zone it is, and it'll show you exactly where it goes based on a satellite map. And they do those mappings. I have no clue. I think in the last 5 years they may have redone those maps since I've been in insurance, but I don't know how often they do them. And it ranges anywhere from if you've never had anybody mention flood to you, you're probably in a flood zone X. Like for you example, and for me, we're in a flood zone X. So everybody's in some sort of flood zone. X means it's 1,000 year floodplain, meaning in 1,000 years, there's a 1% chance it could flood. So it's super low risk. They can't say 0%, right? And then it gradually goes up from there to being in a floodway, which means water is like funneled to that area to reduce flooding elsewhere, which typically you don't see things built in that area because it's too expensive to build up out of that floodway. And they're there for a reason to divert water away from homes and other buildings.
So
But yeah,
Trinity River areas, places like that would have that
yeah,
stuff.
we have an area here close to Crowley that's a floodway that's like it's been there for I don't know how long, but it's for sale. And there's, architecture plans and like bids on how expensive it would be to build up out of it because you're gonna have to build up and like channel the floodway into a creek. And it's like millions and millions of dollars to do that before you can even build structures. So it's expensive and they're there for a reason. New development obviously affects all this. You've got, let's say, 10,000 acres that are getting developed. No one's ever lived there, so you have no idea what the water does. I don't know the regulations behind development and doing the studies and reporting of all that, but you throw a bunch of concrete and move a bunch of dirt on some areas, like it's not going to do what you think it's going to do. There's risk in that, and it's going to push water elsewhere as well. So there's a lot of impacts to it that you just have to kind of account for um, when buying a home, especially if you're not really familiar. No one's really lived there um, before you.
And but what more importantly that means is sure no one's lived there, but that just means that the algorithms and like the big agencies don't have data on it.
Correct. So if anything happens, you have to think like, let's say a tornado hits my street twice in 100 years, right? So that's like a 2% chance in 100 years that, or whatever that math works out to be. It's pretty low risk, right? Obviously, if I experience both of them, it's high risk to me. But you take a neighborhood that's only been around for 5 years and they have two tornadoes hit. That seems like a really risky neighborhood for the next 5 years because, 25 to 30% of the lifespan has been hit by a natural disaster versus a 2% of the lifespan. So it's all based on models and metrics, and insurance actuaries are literally some of the smartest people in the world. They are calculating possible risk versus actual risks occurred and determining how likely they are to happen and determining the rates based off of those figures. So like it's not just a guess. These are all models and everything, whether you agree with them or not. They're very smart people and they're trying to determine that. There's a reason why insurance has been around for so long and they've been profitable for so long. It's because they're more than likely they're right. It's
Yeah.
that simple.
So with the fires in California, obviously priority number one is just getting them stopped and everything else. But what happens next? Like that's gonna be. They've already said it's like 50. Just the other day, first day or two in, they said $50 billion recovery. So are insurance companies at risk of going bankrupt because they don't have the money to pay out?
No, because that you got to account for the fact that like some people probably don't have specific wildfire insurance because either they were told by State Farm or enter in any other carrier name that's out there saying like, hey, it's too risky, we don't want it. And so the person just stops looking. They're told no, and they're like, oh, well, screw them.
So there's going to be
And
a lot
they
of individuals, and like obviously they're in horrible shape and everything with losing their home, but then it could compile and get worse for them because they might not have the money to rebuild.
right. And I don't know how it works when FEMA comes in and disaster relief. I think there's a little bit more relief that kind of extends beyond what insurance companies would do. I don't know if that goes towards rebuilding or if it just goes towards like
Helping
quality
them
of life
get
for those
started.
people and
Yeah.
health and food. I don't know any of that. With the exception of like tornadoes, we don't really have that high of a risk for that type of event here in DFW, at least not in my lifetime. I haven't seen it. So I'm not 100% sure how that's handled, but California as a state has state provided fire insurance. If it's more expensive, sorry, what's the alternative? You lose your house? I mean, every year we hear about fires in California, and this isn't new. Like this sounds cold, but like my wife has friends that grew up in San Diego and they remember sitting in cul-de-sacs, like taking shifts with neighbors to see how close the fires are getting. If they get close enough, you're supposed to wake everybody else up and you're supposed to pack up and go. Like this isn't new. Um, and if it's gotten too expensive, that sucks. But there's a lot of other factors that go into that besides just insurance companies wanting to take on more money.
And it's state to state too, so it's a lot of different things happening. So yeah,
Yeah.
well, that's a situation we'll continue to watch and see how it goes down. And boy, it's going to be a little tumultuous here over the next 30 to 60 days, and then really over the next 110 days or whatever, because Trump's about to take office on the 20th, and everyone always likes to measure everything in the first 100 days of a new presidency. The markets are just bouncing around all over the place. Got a couple different disasters and things happening, and so there's a lot at play. And all anyone wants is some relief from expenses and from inflation and from these interest rates. And so I know I've been fielding a bunch of calls on, hey, when do you think things are going to happen? You've been getting similar calls?
If I do, I tell people like, unless your president or whoever you voted for literally can go out and change the weather, like, there's really no conversation to be had. You either pay what I have or you don't pay for it. Like,
Well, let's put it this way. With insurance in 2025, so obviously over the last few years, insurance and taxes, property taxes, specifically in Texas, have just been through the roof and keep going up. Are there any opportunities on the insurance side that you've seen? I know you've talked about once or twice before with some of these pools, but any opportunities that you see where there might be some cost help coming?
cost help? No, I don't.
So insurance
Ra
is just keep going.
Rates might slow down, but as a whole, I don't see them coming down. I mean, if you just look at the news, like we just finished talking about the wildfires, we just got hit by a snowstorm in DFW. Like, to me, to the
Somebody's gonna
naked
have.
eye, it's coming more frequently. Like, so
And
if,
wouldn't you tell the people if there's like a water leak or something and it's minor and you can fix it on your own, fix it on your own, please don't do a claim.
yeah, so that's also the other thing, right? I have a new client that I didn't end up winning the other day, and they said they were going to stick with their carrier because it was just convenient. They could go online. It's a 24-hour call center if they needed to file a claim. And I told them, I was like, just understand that if you call them and say claim, they're not going to try to convince you to not file it. They don't care. They're just going to say, they're going to hear claim, they're going to file it. And if the damage is $800, but your deductible's 6,000, you now have a negative hit on your insurance and got zero financial help because you didn't hit your deductible. So, what was the point in going for convenience? A lot of people love these apps. I can file an auto claim. I can do this. I can do that. I just take pictures. I don't have to talk to anybody. What that means is you don't have anybody giving you advice, which is a bad thing because convenience kills everything. And then you're upset that your rates go up. And it's like, well, why do I have this? It's like, well,
Because it's
you
convenient.
shouldn't have filed that claim. It's
Yeah.
it's a fact.
Yeah. Well, I think that we should try to reiterate that over and over. Tell us why claims, why just filing claims to filing claims. What does that do again?
It causes your rate to go up. You're riskier. It's I would the similarity to your world is if somebody doesn't pay their bills and their credit score is low, no one's going to give them money. So
Yeah.
if you're
You
constantly
have,
taking
with a
money from
low
the
credit
insurance,
score, you have proven to us that you have taken debt and not paid it back. Everything with underwriting and loans is the ability to repay. And so if your credit score is low, and just so you know, low is really considered under 700.
mhm.
700 to 730 is like pretty good, but not excellent. If it's under 600 and it's in the fives and lower, then like you have proven something has happened in the past,
Mhm.
and you now carry a lot more risk. And
And
you could tell us the sob story, and it might not be your fault, but it happened, and it's on the record, and it's not going anywhere, and not for a while.
yeah, well, in insurance rates, what you pay, right? So there's insurance rates and then there's your premium. So rates are set by the carrier. Like if it's in this box, this is where the rate starts and it goes up based off of the individual and maybe characteristics of the property of the cars. Similar to there's a kind of a version of that in loans. If you're at this credit score, blah blah blah, and then you can fluctuate up and down from there. But insurance rate and your insurance premium is also based on your insurance history. I know for a fact here in the state of Texas, I don't know if it's a national thing, but insurance history takes into account credit as well. So if you've never filed any claims, great. But if your credit score sucks, like the insurance company's like, okay, you're not likely to pay, and we're a bill. So whether you're safe or not, from a physical risk standpoint, there's a better than not chance of you one day just not paying us. And we've entered in an agreement to pay you a large sum of money in a disaster situation.
Yeah.
So it's
And
it's money in, money out, and if they don't trust you, you're not going to get that money, or it's
that's
going
one
to
of the big
cost you
things.
more.
It's one of the big things I wanted to talk about too. Is everyone is really, oh, we need help from interest rates. Interest rates are going to be the thing that saves us in our affordability crisis. Not the 1.2 million, sorry, 1.2 trillion dollars of credit card debt that are on the books for the American consumer right now.
Or the
Why
starter
would
home
we why
costing
would
half
we
a
curb our
million.
spending on something up to 30% interest? And I mean, come on. Credit cards are a huge problem. Overspending, living beyond people's means, and then not paying those bills back, and then going into bankruptcy, and all these different things that you see on TV commercials telling you what to do
Hmm.
for your, personal finance. That's what's really driving a lot of these costs. And one of the reasons in 24 that rates didn't come back down is because the Fed looks at all the numbers and it says consumer resiliency. Consumer spending is still strong. Our economy is still strong because Americans are going out and buying things. That must mean that they have money to go buy things.
Right.
And so it's a really big shell game right now, on very, very thin ice.
Yeah, I mean, it all impacts each other. Um, it's funny, like I mentioned I got into a conversation with somebody on Instagram. It was a realtor in Texas, and he was reposted a video from a finance girl. She was like, it was like rage bait, essentially, if I had to put a term on it, and I hate using a popular term like that, but she was like, insurance companies aren't covering what you think they cover. They're screwing you essentially. And I was like, you just have to ask questions. Like, you can't be upset that the car you
Yeah,
bought didn't have remote start when you didn't ask if it had remote start.
yeah. From that question, or from that statement, my question is, well, what did you think they were covering?
Yeah, ask. If wildfires are a concern of yours, or if tornadoes are a concern of yours, or hurricanes are a concern of yours where you're living, why not ask that 15-second question? Hey, agent, am I covered if I get hit by a hurricane? Hey, agent, am I covered if the forest behind me catches on fire? That's a simple question. And that is a
Hmm.
yes or no answer. And then from there, you can ask more questions. But we got into a conversation. He was like, it's predatory, blah, blah, blah. Like insurance agents lie and all this. And I responded to him, I go, just like somebody who buys wholesale properties and foreclosures, you're not really giving them a great deal. You're just getting them out of a bad situation and you're profiting off of that. When in reality, the property is worth maybe 300,000, but they only owe 64 and they can't pay it. And he was like, well, there's a clause in our licensing. We have a fiduciary responsibility. And I go, well,
And give them more than 64,000.
you give him more than 64,000 then. And plus, I'm not a fiduciary. That's not my license. I don't have the responsibility. I'm not lending anybody money. You're not making any money off of me. I advise from a financial standpoint because I believe in helping my clients and making sure they understand. But to say that, like, didn't real estate just get sued because they were misleading about commissions and sales prices? And you want to come at me and say that insurance doesn't follow their fiduciary responsibility?
And I think
What?
there's some antitrust situations in there too with NAR and all these other things. What do they really offer these agents in our market? They force you to pay into their dues.
Hmm.
What does that do for anybody? That's
Yeah.
just adding costs, adding more layers to the process, and then making it in turn more expensive for the consumer. So, yeah, there's a lot of people online that say things that don't make any sense at all, and they are dug in. They're like, I'm the expert. Subscribe to my channel, pay for my shit, advertise on
Yeah.
my channel because I know everything. And it's like, what? Because they're literally talking about things that they are doing illegally. They're saying it out loud. The billboard or their channel might as well say, "Hey, come here to learn how I'm violating RESPA. Come here to learn how I'm violating whatever." RESPA is a big
Yeah.
word in my world right now as I try to expand my brokerage. And like, whoa, geez, I'm learning a lot about the
Yeah.
intricacies of each law. And then you learn, whoa, well, have all my employers, even going back to big banks, have they been doing it right? I'm sure they have,
Right.
but
Yeah.
it sounds like there's some gray area, and so a lot of real estate people live in that gray area, and tons of wholesalers, investors, they are purposely not licensed as a real estate agent to avoid
Yep.
having to deal with that litigation.
We know a few personally. and they're great
Tons.
people.
I
They're
know a
great people.
lot.
Some of them are great people. And I
If
also
I
know,
could, if I could get rid of my license, that would really help me.
and I know a ton of insurance agents that are great. They operate in kind of my ethos and my way of thinking. And I know some that are not truthful with clients or misleading or hide costs and
Well,
misspeak and things like
I,
that. Like it's true everywhere.
I have one today. I'll pull up this email. Um, I'm gonna say blank bank, okay, because they're trying to buy a house. They're kind of an investor. They've got some cash. They don't want to use all the cash because they've got other ways that they would like to use that cash, but they want this new house. And so, getting it all figured out, me versus a big bank.
Hmm.
And they're like, man, the bank's deal is nuts. And they told me the deal, and I called all my wholesalers right on the broker side. We have wholesale lenders, and I'm like, "Have you heard of this? Have you heard of this? Have you heard of this? Can you beat this? Can we even touch this?" And everyone's like, "I would be shocked if that is the real case." And then because the client has had multiple conversations with this bank, and in the email, 2024, one of our big words was bait and switch.
Hmm.
And here we are in January 25. Blank bank was a joke. It was a bait and switch. That's the first two sentences of the email. And then he details out exactly how they were able to get to these really low numbers while they were quoting him on a sales call. And I kept
Mhm.
telling him, make sure you're talking to the right person. Well, they say that they're the head of the mortgage department or whatever for the branch.
Yeah, that cubicle that they're sitting in is the
Yeah,
department they're
well, I
talking
was
about.
like, just make sure like I want to make sure I'm quoting accurately so I have a real opportunity to win. Here's what I can do. I'm giving you a discount, and I do trim a lot of that middle stuff out so that
Hmm.
I can I don't charge certain things that I can charge that I know a lot of loan officers charge so that they can keep more of their commission. I effectively pay a couple fees for you by not charging you that, but that's what I
Hmm.
want to do to help people save money, to help get them a better deal, and then earn referrals from them, and then really have a longevity in the business. And that's my strategy. I don't want to pass on costs. So that's what I'm trying to do.
Yeah.
And I'm like, man, I'm making like nothing on this. How in the world could I get beat by way over 1% on a rate? And they're telling me no closing costs? Get out of here. And you break it down, and they're hiding fees essentially. But one of the sentences here I really liked that he said was blah blah blah. I had to finally dig it out of them to get the rest of the details.
Yeah.
And so, like if you go ahead and go convenience, go to the place where they want your deposits, where they're offering you a little bit of a thing here. Go to that builder who is offering you all these grand incentives, who is basically bending you over on one of these other pillars that they own, and they're
Hmm.
charging you and getting their money back over here. Look, don't look over here. Look over here. Um, Go to convenience. Go to those things and find out down the road. More than 50% of the time, you're probably going to find out later about something you didn't know.
Yeah. I
There
mean,
are people
it's,
who do a good job, and some builders can give a true incentive, and I can't touch that, and that's great. Take it. But there are others who are not totally honest. How are builders not a part of these lawsuits?
regulations.
Yeah. How do they not have anyone coming down and say violation, 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 antitrust? How is that not a thing? And it'll never really get touched either because the cities really like tax revenue.
Yeah. Well, we had a goal to keep this at 15 minutes. We've obviously gone over that. So let's do final thought. Maybe we can cut this up into two if there's a spot we paused in the conversation. But I would like to do final thought completely unrelated to our business. Obviously, there was a game last night. There's a game tonight.
Oh, well, let's
Uh,
finish with that. Let me give you my final thought because there was news
okay,
today.
gotcha.
So in the rate world, everyone's wanting rates to come down, right? They probably holidays, they've got some credit card debt, different things. They're trying to find their way out of a situation. We just can't forget to look at the total costs. If you, some people are really in a bind right now because they don't want to give up their low mortgage rate, but they have all this other debt that has high rates
Hmm.
and it's killing their budget. So people are winning right now on their personal budgets and starting to get ahead and get out of some debt by giving up that mortgage rate or by adding a second mortgage, a HELOC, one of these other kinds of strategies to help get rid of that other debt and then saving monthly payment. Use what you were paying over here, saving, pay it down here, boom, that second mortgage is gone, and now we're
Hmm.
back, baby. Right? So
Yeah.
people are winning in those strategies. If you have questions, call me. I can help with that kind of stuff. But everyone's waiting on these interest rates to come down. They think that's the end all be all fix. But guess what? Bad news. Today, the jobs report came out. Last jobs report before Trump takes the office. And the jobs reports blew the expectations out of the water. Way more jobs created
Hmm.
than anticipated. I have a hypothesis that that's because it's a lot of seasonal holiday jobs that hit that report, and you're going to see it adjusted down the road for a lot fewer, and then maybe we'll get some back. But rates hiked again today by quite a bit, and so now we're getting closer to 7.3, 7.5% as a average rate again to start the year. So not the news you want right out of the gates about interest rates, but that's where we're at. And all these jobs reports and everything, we just need the transition of politics to be done so that we know what we're staring into for the next 4 years.
Yeah.
And I think once the markets get some settling on that, we'll finally start to see things be different or react the way that people might anticipate. All of the experts are saying that the rates are going to come down, but all the experts said we were going to get six or more rate cuts last year, and then the rates were going to be back down in the fours and fives. So, what does that word expert mean to you anymore? So, all I care about is that people get good advice on their situation that can help them now and into the future. And don't forget that real estate is a long term thing. You're
Hmm.
not going to make money now, but you can make money now if you buy now because you're getting a discount on an asset.
Hmm.
And then in 2 years, 3 years, however long it's going to be, real estate is not a 1 to 2 year game. So if you're buying thinking you're going to flip it and make a bunch of money by living in it in a year, you're not. But people who have bought in Southern California, not take the fires out of it, San Diego, like you said, those kinds of places, man, they are retiring off their equity in their homes
Hmm.
because of the appreciation and because of the opportunities of home ownership give you and everything else. Those same things are happening here with the population growth and just the overall development growth. So just don't forget that you can get a discount, and there are other ways to buy now and keep the strategy lower on your payments entry level, and then worry about refinancing later when everyone else is worried about fighting for homes and
Yeah.
maybe competing. So take that competition out later, but buying an asset at a discount, that is something to consider as an opportunity if you can get around the rates, because you've already gotten around the rates on that 25% credit card. So just take that out of it and look at the total numbers, and just close your eyes and hit the grind. And by the end of 25, you might be really happy.
Yeah. I mean, you've been saying it all year and now obviously all this year. So I'm sure that message continues and along with our bait and switch conversations that we continue to have.
I don't
Um,
want to have them anymore. I want everybody to be honest, but that's never going to happen.
I don't want to have them either, but it may fuel an audience for us at some point. So we'll hold
Yeah.
on to it as long as we can.
But that's my big thought for last thought of the first podcast of 2025 is have a bigger mindset, play a bigger game, and look at more information when you're making your decisions. If
Hmm.
you're making a decision right here with your blinders on, you might feel trapped.
Yeah, exactly. Good
Game
final
football.
thought there. Yeah, football. We'll make it quick. We got 2 minutes left. I think the Texas Ohio State game is going to be the first like really good game in the playoffs this year. Last night's game, it was like watching two blindfolded kids with their arms behind their back try to throw a football. It was awful. Watching running games in college football that don't break off for 80-yard touchdowns is
I'm
extremely boring.
I'm tired of watching offenses hit the brake and stop hitting the gas when they have a lead.
Hmm.
Like you're throwing the ball that the guy with the sweet name, something House for Notre Dame. I can't remember. He's got a cool
I
last
can't
name.
remember either.
Um, but they were throwing the ball to him. He was having a record day. You're up and you're in the third quarter, and then you kind of let them back in because you take your foot off the gas and you start doing 3 yard quarterback draws every play out of security. Texas did that to Arizona State, and they almost
Y-
lost
Yeah, exactly. I will say though that every time those quarterbacks dropped back and passed last night, I was like, oh, they're probably going to throw a pick. Like
because they
there was
were
three
scared, and they're
interceptions that
all
were
but
null
they're
because of
playing for
penalty.
3 yard outs and all this kind of stuff. I want to see all gas and no brakes. And Texas might not be able to do that. And I do not like Ohio State as a Big Ten fan and someone who likes Iowa. I do not like Ohio State, but Ohio State is the only one that I've seen that doesn't take their foot off the gas.
Yeah, they don't. It should be a good game. Regardless, whoever plays Notre Dame, I think Notre Dame gets pushed into the dirt pretty quickly and easily in that
That's
national
like the
championship
last
game.
time they were in a national championship.
Yeah, 41-14. It was a great game. Roll
Ugh.
Tide. Uh, anyway, we'll talk soon. Everybody watch, like, subscribe, do whatever, buy a house, help us out.